What is going on YouTube? Welcome back to another video. This one is going to be a little bit differently than normal, and when I say that I mean just because of the distribution on this. So in today's video we are actually going to cover the TGIF by SoFi weekly income ETF. With that being said, let's go ahead and jump in to this one. Cue the intro. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, so this one you don't hear a lot of. I know I'm a big fan of monthly dividends. I know a lot of people are as well because I've been told a lot of people have messaged me. Now, this one is a little bit different because you're going to get paid every weekly. It's like getting a paycheck every single week. Now, when it comes down to this, there's a little bit of a catch though. So sometimes when it's too good to be true, sometimes it can be. Now, where are they getting the money from it? Because there's no companies that are going to pay out every single week. Basically, so if you go to SoFi here, because it's made by SoFi, it's an ETF. They're really not known for this. They're really known for other things, but this here, the past year or so, they've been getting into a lot of things. So if you want to figure out their holdings, you can here. It's a lot of, I've already been into this. It's going to look a lot like I know they hold Applebee's, they hold Ford, and they hold a bunch of others, basically like BDCs, basically buying their debt. They're not great, but they're going to pay out at a higher percentage. And yeah, so that's how they're able to pay out every single month. But so the one thing I really want to go into here is the overall. So Max, obviously, ever since its inception this past year, it's only gone up. It IPO'd at about $100. Now it's at like 100 and what are we at? 106. It got up to like 107, maybe a little bit higher, I thought. But anyways, it's up there. So with that being said, where do you get your money? And we want to look at, is this one really worth it? So again, $106.12 is what it's going for, and you're getting paid 5 cents every week. See, they started here in 2020, at the end of 2020, and they're paying weekly dividends. So this one was on 10/06. Obviously, if you track everything, this is what you're getting. And no, this one's monthly, but they're going to pay it out every single week, every 7 days. As you can see, it's 5 cents every single month is what you're getting. So, again, you're looking at about, I think it was 2% is what I saw it actually ended up becoming as a yield return. I don't know about you guys, I'm not excited about 2%. If somebody shows me, unless it's like a Johnson & Johnson or something like that, giving me a 2% dividend, there's got to be a lot of capital growth. So this price of $106 would have to be willing to be running to 115, 125, 150 bucks within the next couple of years to, make it worth my while, and considering the dividend's not going to be so hot. But it's a great idea by SoFi. I really do think that it's a great idea. Just not completely executed right, because a lot of people are getting more into these monthly dividends. If you can get a weekly dividend, that means your compounding growth is going to happen faster. But now, so when you compare, what would happen if you compared one of these to a monthly dividend stock that's actually going to be better, going to give you about the monthly income like we've talked about, but it's going to be at a lower price but at a higher dividend yield. And that's where you're kind of coming at this one at, and that's why I pulled up, like always, the portfolio visualizer. I love this tool, and again, this is not going to predict the future, but it's going to give you something to be able to look at overall compared to what it's done in the past. Now again, SoFi, this could change, and this is my biggest thing for this one, is it hasn't been around long enough to know exactly how the distributions are going to stay. Now, I like personally going through this portfolio growth. The portfolio growth is not my biggest thing. Of course, PTY has came down a little bit because of the dividend thing, but your dividend income is still going to be higher. So your overall growth SPY is beating it in the overall annual returns. But when it comes down to portfolio income, and again, that money that you're going to live off of eventually every single month, so you're waiting for that paycheck every month, PTY is going to be better. And why do I say that? Well, it's just because it's true. I'm not trying to be mean to anybody or anything like that or understand it, but when you're looking at TGIF making $57 over the same amount of time that PTY's made $154 or $194, and SPY's made $38, SPY's almost giving you the same return in income as TGIF is, and TGIF is supposed to be an income fund. That doesn't make any sense to me. So if you guys figure out a better way to explain this and understand it, please let me know. I'll make another video on this. But as of right now, the TGIF fund is not worth investing into me. Maybe, if you got an extra $100 something and you just want to throw one share into it, that way you can say you own it, sure. I mean, I get it. Maybe that way you get the dividend every 7 days or so what, and you're happy about it. I get that. I'm more of, I want to utilize every bit of capital that I have. Cash is trash, guys. Remember that saying. Whether you're investing in real estate, stocks, anything like that, if it's sitting in your bank, it's getting no interest rate. Where's the interest rate? 0.03 right now? I'm not sure what the interest rate for a bank, for a savings account is. So remember those things. Utilize your capital to the best of your ability. So every dime that I have, and I've told this to some people, and some people have asked me about it here lately, is I'm still investing every dime that comes into my retirement accounts and stuff. I am not pulling money out of my retirement accounts at all. I'm letting it keep, that drip process keep working, and I'm still adding money from my trading into it every single week. And I think that's the most important thing, is utilizing your capital for better. And TGIF, I'm going to give it a thumbs down. I don't think this one's actually worth buying. There could be some changes in the future. Maybe some things happen. Maybe the stock price drops dramatically. Then maybe we'll pick up some shares on the low and it'll be worth it, and we'll get that capital appreciation back up there. Plus, we'll get that weekly dividend. I would be 100% okay with that. Now, at this second, though, I think $106.13 is a high price range for this stock. I don't like it. I don't think it's really worth doing, because if you're looking at a compounding effect still, yes, weekly compounding is better, but not when you're getting the yield, or PTY is giving you a better yield. SPY is giving you just as good of a yield almost on that same money. I would rather be putting my money in PTY or SPY. My honest opinion, don't shoot the messenger. Do your own research. Know what you're doing. If you want to go through these, again, it's not going to show you guys because I just have my screen shared here with you, but it's going to pop up as a thing. You can see it. It's got like Applebee's and stuff like that in it. You can look at all these. There's a ton of other reviews on this stock. It's really just not a great investment at this time, to be 100% honest with you. I am not a financial advisor. Please do your own research. Do your own due diligence. Know what you're investing into. Remember, some funds are too good to be true, and $106.13 for 5 cents a month does not make sense to me mathematically when there are way better options out there, whether it's SPY or you find a closed-end fund or you find a QYLD, which is absolutely going to destroy it. I actually kind of want to show you guys this really fast now. And again, you guys know how to use this, so we're going to take out SPY because we're going off of just income. We don't care about the overall growth at this exact second. Of course, you care about the overall growth, but you just want to see where you're at income-wise. Oh, I didn't change it. So SPY here, this little thing here that says SPY would actually be, so this orange one is going to be QYLD. I didn't change the name of it. So QYLD is actually going to do better than PTY when it comes down to the income fund as well. But again, QYLD is a much better fund than TGIF if you want something that's going to be a monthly dividend as well, that you're going to be able to buy on any platform no matter what. And that's not a closed-end fund. It's an income strategy with options is what they use to make money selling covered calls. So that being said, thank you guys all for watching this video. If you have any questions, please leave a comment below. I will answer them. If you look at all my past comments, I respond to every single one of them. Let me know, and I will see you guys in the next video.